Hello everyone, good afternoon and welcome to Closing Trades. I'm avannedubas, with me ayeshafaridi as well as nikunjdalmia, and amid the kind of choppiness in the markets, it's nice to see that recovery play out. 17k has been recouped. We're up about 0.5% or so, and for the Sensex up about 300 odd points. Ditto when it comes to the broader end of the market, as well as that recovery from the underperformance that we've witnessed in the trading day is pretty evident. In fact, 5 straight days we've been on a losing streak. We're set to put the brakes to that finally, but of course, the next 1 hour is going to be quite critical. What's gaining traction in today's trading session are names from the OMC space, BPCL, HPCL. They've gained quite smartly, the most incidentally in the last 15 months or so. The media sector is doing quite well, and it's Z Entertainment that is managing to pack in a punch. But on the flip side, metals, they're looking rather tempered in today's trading session. So for now, holding out quite well for the equity markets, and Aisha, nice to see that reversal in trend.
Yes, a dead cat bounce, if you will, much needed at that, because the past many trading sessions, even with a quiet start, we were only tumbling towards the latter part of the day. So yes, marginally in the green. We're set to snap that 5-day losing streak, and what a losing streak it has been. It's the oil sensitives actually, BPCL and HPCL, which are gaining most ground even as I speak right now. They're the ones which are holding up quite smartly in trade. There's also Z, there's ICICI Pru. Those are stocks which are looking good. In fact, BPHP have managed to gain the most in about 15 months, and the Nifty Media, led by Z, is one of the top sectoral gainers. Having said that, amid the global jitters, it continues to be losing ground for the metal sector, so that continues to fall, and there has been no respite. DLF, though, we chatted with the management as well earlier today, and that stock is up 6%. They witnessed some pre-formal launch sales worth almost 8,000 crore rupees in the last 3 days. The management is saying that they may actually beat their FY23 pre-sales guidance, that of 8,000 odd crore rupees. ICICI Pru, that's the other stock which is holding up 6%. Anup Bagchi has been appointed as the MD and CEO for the next 5 years. And like I said, OMC is clearly cheering the Brent fall below the $75 per barrel mark for the first time since 2021. Remember, crude has fallen a good 13% since its recent peak, that of $86 to a barrel, which was as recent as March 6th. So these are a couple of stocks which are pretty active in trade. Having said that, a good amount of recovery is what you're also seeing for a Z, which is now holding up a good 8%. And these are a couple of stocks, Nestle, Titan, SBI, Unilever. They're the ones which are actually holding the boat. So far, okay, much needed respite.
Why is the respite coming from? Respite is coming from because Swiss National Bank has given a loan announcement. First it was FDIC, which came out and secured the depositors. And now it's the Swiss National Bank which is ensuring that Credit Suisse does not go belly up. Central bankers, in this case governments, are doing whatever it takes kind of an attitude, and we are talking about a $50 billion helpline which has been given to Credit Suisse in this case, which means that they are doing whatever it takes to protect that the banks do not go under. That was not the attempt in 2008. They reacted, and they acted very late, and by that time the collateral damage in the money market and the financial markets had happened. Not even 24 hours and Swiss National Bank has come out. Not even 2 days and the insurance depositors, FDIC in a sense, came out and insured all the depositors. So the idea is that whether it's a bailout or whether it is trying to stop the contagion, the central bankers are acting very, very quickly. The challenge, Aisha, is not interest rates, valuations. It's about confidence, that will the banking system collapse or will the banking system just will be protected. Now markets are saying that, look, we are nervous, but the nervousness thankfully is getting not amplified. The nervousness is getting addressed by what central bankers are doing. So once we get rid of this nervousness and markets get a sense that, okay, all is well, asset liability mismatches, everything's been taken care of, confidence comes back. Then we'll talk about interest rate, inflation, valuation, flows, China, India, metal price. That's all secondary. Today, the primary objective is the confidence crisis, and I think central bankers and governments are coming out and stemming this entire, nervousness.
Sandeep Sabharwal, Kunal Potra, Naresh Mirani on the show. So let's chat what they're making of the markets right now. Sandeep, hi, afternoon. You in any case believe that the Credit Suisse crisis is sort of irrelevant to the global financial system, right? I mean, they're not, or rather no more the bank that they used to be 10 years back. So this panic is purely, I guess, because of the fragile state of the market.
Yeah, exactly, Aisha. So I think since sentiments are very fragile, so people are first pushing the sell button and then thinking whether it's the right thing or the wrong thing to do. And even after they have pushed the sell button and they realize they are wrong, people don't want to buy. So I think it's a good sentiment. I think these sentiments are required for markets to actually bottom out at some stage. So I think it's not necessarily bad. Credit Suisse, my view is that it used to be a very large bank with global connections, etc. It's been under so much scrutiny last 10 years. A lot of their derivatives, etc., have got wound up. So they have a lot of wealth management, etc., operations where it directly doesn't whether they have outflows there or not. It's not like deposit outflows, right? It's outflows like a mutual fund loses assets, so that they don't actually exactly go belly up because of that. I think there's a lack of understanding, but that's fine in such kind of circumstances. It happens. Overall, I think India is pretty well placed. I think on a macro basis, India is one of the best placed economies today. Valuations are not as expensive as they were 12, 15 months back. And so to that extent, I think these are good opportunities to buy.
I mean, waiting and waiting and waiting to hear from Sandeep Sabharwal the word buy. I think he used this term that I'm buying in March 2020 and April 2020 and after that in April 2023, right? 3 saal baad Sandeep Sabharwal is saying I'm bullish. Am I wrong?
No, no, actually not being very sure for me because when I was more skeptical on what I'm buying. So I don't know whether being bullish is better or whether being not bullish is better.
Buying. Now that you've told us you're buying.
So I think Indian banks are best placed. I believe that Indian banks are no way correlated to any of the global banks. So I think people should use this opportunity of correction in banks to buy large cap Indian banks, which could be Axis Bank, ICICI Bank, or SBI, or HDFC Bank. HDFC has not fallen so much. So I think so first three would offer better opportunities. So capital goods is a good story, but there we haven't seen correction. In fact, many of the capital good or infra companies actually held up very well, so that I'm not buying right now. Auto companies have got sold out, especially the four wheelers, M&M, Maruti. In fact, Suzuki is been buying in the market, so that reflects their confidence. So I think these stocks on the large cap side look good.
Banks are making a comeback. Nuresh, how real is today's rally? Dead cat bounce, oversold market which is bouncing back, or there is strength and there could be durability in today's comeback? Nuresh.
So in terms of the technical structure, what we see is today's formation. If we don't see a big crack or a big rally from here on, we close around this zones only. It will be a classical doji candle. Also the fact that RSI was oversold at 30. And generally the bottom days actually have a lot of intraday volatility. So all the criteria is matched today. And then going forward, we watch for say 17,180, which is the high of the last couple of sessions to cross. Same way for the Bank Nifty, that would be closer to 40,000. 39,800 to 40,000. Once that happens, that will confirm momentum on the upside. But it's very clear these are very strong signals of a short-term bottom being in place. And also the fact that globally also we've seen that volatility across the world. So say US markets have seen volatility, they have drifted lower. But even the markets like Europe, which were actually going towards an all-time high, 52-week have also corrected quite a bit in the last few sessions. So all points to a possible bottom in place, and the simplest trade right now is to keep a stop loss at today's low and remain long.
17,037. So Kunal, what becomes now a stop loss and what becomes the level at which you would go short again?
See, I think for last 7 or 8 days from this 17,800 from where we've corrected, we've not broken the previous day high. So the first port of call is that if we get a confirmation of a break of previous day high, that's a sign that bulls are making not just a comeback, but I think it's more of a durable comeback. That level I think is around 17,150, 160 mark on the spot levels, which means we are just about some 100 odd points away from those levels on the index. So that's the first sign of confidence which could come back in again into the index. The other way to look at it is that I think majority of the action today is of course got to do with the expiry, the weekly expiry, because I was seeing that a lot of the expiry trades at how the 39,000 call initially was written, and then in the mid session today there was extreme amount of writing at the 39,000 put mark. So that was a clear indication that traders have shifted their stance from being sell on rise to possibly being a buy on dips kind of a market. My belief is that possibly in the next half an hour or so, we should expire significantly above the 39,000 mark on the Bank Nifty. So putting both these points across, I believe that once we get a confirmation about 17,150 mark, possibly a near-term bottom could be in place.
Okay.
All right, let's get in a take then as well from you, Sandeep, as to what the outlook is on the media space, owing to the fact that we're seeing that pull back as well, kicking into the sector as a whole. And it's been nothing short of a volatile journey for a lot of these companies. But now we understand that IndusInd Bank as well is likely to withdraw that insolvency plea. We're going to see the culmination of that deal with Sony as well, only getting closer. What's the outlook on the entire media space and Z in particular?
So I think Z specifically, if before this entire news flow, etc. came, I think it started falling from 230 to 40 and it corrected. So the probability that it could reach there is high. But I think that's about it. So unfortunately, the general entertainment space, ad revenues are continuously declining. They are losing market share. Subscription revenues are not so high. There's no growth. In fact, there we could see declines there also. And content cost keeps on moving up. So there's no long-term story per se. It's more a trading kind of sector, I would say.
Sandeep, stay with us. Lots more to talk about. But here's what top market veterans are making of the global chaos right now.
The psychology of the market too greatly as far as the Fed was concerned. So that might be a thought there. And what that does naturally to the US dollar, and where does, the likes of indexes, what happens to Wall Street and the overall picture globally with equity markets. And naturally you roll that across to bond yields, currencies, commodities. Look at copper yesterday, down nearly 4%. Gold still sitting at that 1915 sort of handle. I'm looking on the screen now, about 1915. So, yeah, there's big moves out there, big volatile moves.
Ultimately, once this plays out, maybe the impact on the markets may well be positive, because what the markets now are banking on is that because of all these issues, Fed will back off somewhat on the rate hiking. In fact, being like kind of zero weight on banks, we actually went to market weight on banks now about 9 months ago, and that has done well for us. So that we still continue. Capital goods, we continue to be overweight, but of course, that story has been playing out for us for a year and a half. So I mean, while it still looks like an outperformed sector,
the transition from the IC engine to the EV engine, you're on a structural growth path. AI is another area which is, you can see around the world that's going to significantly change things. Cybersecurity is another area where you get tremendous amount of growth, right? Engineering services, the world is moving to more and more defense expenditure. So I think you'll see a lot of these kinds of changes taking place.
As an investor, the first thing which we have to remember is that what are the possibilities of SVB kind of situation in India? One, our interest rates haven't risen as much as US Fed had to raise. So to that extent, mark-to-market losses on our treasury portfolio will be limited. Number two, India has implemented Basel III norms for banking system. In US, it has been implemented on a piecemeal basis. Under Basel III norms, you have to maintain liquidity coverage ratio, which apparently wasn't maintained in SVB cases. So to that extent, we are better off.
So if markets collapse further in terms of stock prices, particularly of the banking sector, and the valuations will become a little bit more attractive, and then markets will start looking ahead, potentially if the Fed rate hikes stall, So there could be, while it's going to be a very volatile environment, there will be trading opportunities, I think, in this environment to make money. So the valuations of the banking sector and some of the other sectors where there's been price dislocation actually becomes a little bit more appealing. And and emerging markets as an asset class obviously look even more attractive as compared to the US.
All right, now with conversation with the technical experts Sandeep Sabharwal, and moments from now Shang Desai of Master would also join us. Meanwhile, Nifty, it's not like a straight line rise. We've recovered from the day's low, but at higher levels again, closer to 17,000, we're running into resistance. Dow futures are down. European futures, despite the Credit Suisse bailout, they are not showing any signs of perfect inertia. Sandeep, is there a trade now in FMCG and consumer names? Commodity prices have come down. These are defensive stocks. They've got no cash problems. What happened to Credit Suisse is not going to have an impact on soap and shampoo and Chyawanprash sales. Do you think it's time to revisit that?
Yeah, people should be betting on consumer stocks, especially given the fact that we have seen a decent sell-off across the board in most of the consumer stocks. So, inflation has impacted demand in the short run, but eventually, I think as inflation settles and as we go into the second half of this year, demand will start coming back. And like you rightly said, a lot of their input costs are moderating. So I think FMCG, the larger players, should be a decent play from here.
Okay, fair enough. Should be betting on the entire consumption space. That's the view coming in. In fact, just want to check in on some names within the broader markets that are still reeling under pressure, and metals is notable. The likes of Hindalco, Tata Steel, NMDC, JSW Steel are all under pressure. Naresh, let's get in a view on the charts.
Technically, most of them have continued in their sideways to downtrend. The only stock which actually has been showing a lot of resilience has been Jindal Steel, wherein the stock has a lot of support around 520 to 550 mark, which is coming close to that prices today. But the rest of the names, say Tata Steel, has continued in a downtrend, not been able to make a comeback in a strong way. The stock is close to breaking the last 3-month lows. Same is the case with the Hindalco or say a Nalco or a SAIL. So the only one which I would like to play out on the way up would be Jindal Steel.
Set of stocks which has really taken a tumble has been the entire IT pack. And Sandeep, you rightfully did observe that Infy is actually just 4% off from its 52-week lows. I mean, the world is thinking that all doors are going to shut for IT majors, with global businesses. Is this time to buy IT, Sandeep?
No, I think especially on IT, I would still think that it's wait and watch, simply given because of the fact that till a couple of weeks back, the view was starting to become that there could be a soft landing kind of scenario and demand will not get impacted, etc. But now there are issues in the banking sector in the US. So those issues might not lead to a crisis per se, but as if the profitability of many of the banks suffers, then some outsourcing budgets, etc., might be reconsidered. So I think volatility leads to postponement of decision making, and as it is, the economy is slowing down out there. So I think that's the risk for technology stocks. So I would think that for technology specifically, I would still wait it out.
Let's, in fact, take stock of what's going to really happen with the IT sector, and we're going to have the management of Mastech as well join in. Sandeep, good to have you on the show. We'll let you go on that note. And let me also welcome on board Ashank Desai, the VC and MD at Mastech. Ashank, hi, afternoon. Welcome to ET Now. Thanks for taking time out. Ashank, you tell us, I mean, how big is the concern really with SVB and Credit Suisse? I mean, do you really fear that clients are going to sort of tighten their purse strings?
See, the clients that we are talking obviously are only in the financial sectors. The present impact, if there is any, is in the financial sector area. And we have checked our BFSI customers, although we have relatively lesser weightage in our business to BFSI, but still we have checked. And we have not found anything that is concerning today from the customer's viewpoint. Then there is the whole startup issue. those people who are working in startup area, startup as customers, they may have some issues, if particularly they are using SPV banks and other smaller banks. But again, the startup as a market segment for IT industry is not really large in that sense. So I would see, as of today, things do not seem to be something which is very seriously to be worried about. From our customer talks that we had, from Mastek's viewpoint, plus whatever overall I can see from what we hear in the market.
Mr. Desai, Nikunj also joining in. What are the chances that currently your clients, and in the right spirit, they are not able to perhaps comprehend the problem? In 2000, I remember nobody was able to comprehend the problem. 2008, nobody was able to comprehend the problem. Is the business cycle deteriorated so sharply that what looked like a no problem really became a big problem?
Yeah, Nikunj, hi. Good to meet you. See, Nikunj, I don't know, I'm not a financial expert, but as I understand, 2008, as all of us know, started with large banks. Here we are talking of a smaller size banks. In fact, as of today, apparently, it is only small banks who have some pressure on them, because obviously people are moving from small to larger banks. And they would not do it unless they feel comfortable with larger banks. And I'm sure you have a data as to larger bank accounts for what percentage of total credit in the economy in US. And like other any 80-20 rule, I suppose the large ones will account for very large, much large share. So I look at it from that perspective. Basically, where is the problem concentrated? And from there I conclude that way. That is the only way I could answer your question.
When you talk specifically about the clients, another ingredient in the melting pot, if you may allow me to put in, is that banks will now be forced to go easy in terms of the balance sheet expansion, whether it is a large bank or a small bank. If banks are going to go easy in terms of the balance sheet expansion, it means less growth for them, less business for an outsourcing IT company. Do you think gradually that factor will be at play? Because post-COVID, sir, it appeared that everything in the world will go digital, everything will go online, offline, online, everything will be linked with IT. But now that wheel is changing.
So balance sheet expansion point I do see, Nikunj, but I can't relate it to the IT services business as such. Balance sheet size has an implication in terms of their operations, in fact, which has, in that sense, a positive connection with the IT services company. And by the way, when we say BFSI, let us be clear, it is financial services, include banks, of course, but it also includes the investment banks. It also includes other kind of credit companies and insurance companies. So if you say that BFSI as a sector is quite large, but if you focus on only banks, my guess it will be 15% or so, but I don't have an exact number, but given that overall is 40%, my guess is around, what we are talking is, certain percentage of our IT services market, even if there is a negative impact.
One simple point, that according to you as of today, and we're talking about situation as of today, you think this is a storm in the teacup, and Indian IT sectors, and especially our viewers who invested in IT stocks, they should not really worry about this impacting the IT sector per se in a very serious manner.
Yeah, that's the way I look at it, as all the early signals that we are getting, as I said, talking to our customers and what we see in the marketplace in terms of how Fed is moving, how they are wanting to, the president himself talked about how it is being contained, etc. So I think situation is different. I definitely do not see as 2008 reputation as it stands today. Definitely.
All right, thank you for giving us that clarification as to what the overall ripple effect is at business at Mastek. On that note then, just quickly checking in on what the rest of the market is up to, and we've completely flattened out as things stand. Let's get in those closing picks from our chartists as well. And Nuresh, what's looking good on the charts? Mute yourself.
That would be a buy on L&T Finance holding. The stock has corrected from 96.98 levels to 86.85. That's a very strong support area. Last 2 days it has found support around those areas. So expecting a bounce back from here towards back to 96.98 levels.
Okay, there you have it. It's L&T Finance. Meantime, let's get in your trades recommendations then, Kunal.
Well, that'll be IEX. I think the stock comfortably closing above, very close towards its 200 moving average, showing signs of strength from yesterday. So would be the stock which would be on my radar as well as recommended to clients.
Okay, let's focus on the big buzzer today, and that's clearly DLF. That stock holding up pretty much around the session highs as we speak right now as well, clinging on to that 4.5% move. In fact, we chatted with the management earlier today and a bumper booking for the luxury offering. That's the Dabur project. We had the CEO Ashok Tyagi saying that they're betting big on the infra boom and working for building on a robust pipeline in anticipation of demand as well. And of course, here's more on whether or not they're looking to up their guidance or not.
The infrastructural investments that we have made in partnership with the government of Haryana on the Golf Course Road in Cyber City, people expect that gradually the benefits of those will also flow into the Golf Course Extension Road. And I think the first point that Akash mentioned in this talk is that there was a latent demand for a DLF group housing, because the last one we had launched in this price bracket in Gurgaon was in Crest in 2013 or 14. So there was almost 8-9 years there was a vacuum, which I think was waiting to be filled in. We are working on our launch pipeline for next fiscal. In fact, by the time we come up with our annual results in early May and the analyst calls and media interactions after that, I think we should be able to give you a far more concrete action plan for next year. But you are correct that we are looking at accelerating the launch pipeline, not only in Gurgaon, but in other parts of the geography as well. Because as we have all seen that the recovery of real estate sector has been pretty secular across the country. So hopefully by the time, in the next 4 to 6 weeks, when we come to you with the annual results, we should give you a more concrete action plan. I mean, this has obviously put a lot of pressure on us, because if this is the pre-sales we are doing this year, then obviously this has put a lot of pressure on the guidance for next year as well.
Even at high levels, little bit of buying is just not sustaining. So there is this constant supply at higher levels. You've gone below 17,000 yet again. 4-5 days of decline, and then the market is finding it difficult to sustain even after a straight line fall. What do we have? We have a little bit of comeback in Europe. The Credit Suisse bailout has happened, and there is no recovery whatsoever in the world. Chakri, the problem in the world were two. What will happen to the US banking system because of SVB, and Credit Suisse, if at all, will it have a domino impact on the global financial market? Both those concerns are getting addressed by local authorities. Yet there is nervousness in the market. Why is that?
Indeed, if you look at the previous crisis, the fashionable word in the US and the West was taper tantrum. And now the new fashionable word is it. So I guess the word everybody's waiting is whether the Fed pivots away from raising rates to either holding or cutting rates. And why that is important, we have seen Silicon Bank. Now, actually, Silicon Bank is not a small bank. To think of it, its asset base was as big as an HDFC bank's base. It's small in the context of the US economy. Now, regional banks play a very important role in the SME lending of the US. So by all these banks in problems today, so in essence, what is likely to happen is all those companies are going to see a credit crunch. Their businesses are going to slow down. So the recession that the Fed wanted is probably going to happen in an unruly way if they can't control, if they cannot get the regional banks to lend to the small and medium businesses across country. I guess this issue is not yet resolved. It's not bailing out 1 or 2 banks. And I think that's what the clarity is needed before this market can rally.
So let's say we did get no clarity. next 8-10 days, what will happen to markets? Will they fall more, or this is a good time to buy into markets?
We were looking the other day, they're still, the valuations are looking okay, but they're not screaming buys yet. Here and there pockets you might find. So from that perspective, I think at best, it kind of moves up and down like it's the way it's moving today. But I don't think clearly we are not finding stocks which are good to buy in a crisis mode. If it was a regular market, then you can buy it. But in this kind of markets, I think if you apply Trow multiples, we are not there yet.
Pharma did show signs of life. FMCG has shown signs of comeback. Naresh, is there a trade there? Nervousness in the market, buy pharma, buy FMCG, typical trade?
These are tough trades given that they've not gone, say, up in a big way. They've been more sideways and drifting lower. So the problem is the moves are very small. And say you play a defensive trade and then the markets get into a positive mode, they again sleep back. So if you look at Sun Pharma, which was earlier a trade at 900, stock went to 1050. We are back to 900 and 950 levels, and we are just in that same area for a long period of time. Same is the case with the other one, which is Hindustan Unilever, which yesterday gave a breakdown and today it's up a bit. But it's been at 2400 to 2600 levels for almost many months right now. So the best defensive trade today has been to buy value stocks, and that has been the place to be defensive. Not the earlier defensive were stocks which were quality and high value. They are taking a knock. Now we are seeing, say, all the PSCs which have huge dividend yields are showing that defensive nature. So I think the defensive pack is now more towards the value side of it.
Just looking at what's actually leading the fall here, of course, metals have been a weak link from the word go. Hindalco, Tata Steel, JSW still down. IT is the one which is actually dragging quite a fair bit. Infi is now down more than 1%. There's also Wipro, which is currently down. TCS, which is in the lag. Reliance, L&T, ICICI Bank are contributing majorly to the fall today. And now it's flattened out even for a Bajaj Finance, for Adani Enterprises, for Kotak Bank, or for that matter, even for an HDFC, and ITC as well has fallen off from the peak of the day quite considerably as well. Kunal, how long do you sense this underperformance from Reliance on the charts?
Well, I think the stock has been underperforming since quite some time, last 4-5 months. In the phase of this market correction, this was one of the first stocks which actually, in fact, from the September lows when the markets rallied, the stock did not rally in a very huge manner. But then in this phase of correction, the stock was one of the few large cap names which managed to correct quite consistently on the downside. The concern for Reliance on the charts is the stock has broken below a major support, multi-month support point at the 2,300 levels. Now that could remain a concern for the stock or an overhang for the stock over the near term, because when such kind of strong consolidation pattern gets broken down, then the stock results into a downward trend, whether it's a very sharp downtrend or more of a time-wise correction, that is something to watch out. But effectively the stock becomes more of a sell on rallies as now it gets very close to that resistance point. So I think I would probably be a bit skeptical into buying the stock at current levels. Would wait out for a point where the stock convincingly breaks past about the 2,300 levels, and hopefully at those levels we can probably have a better market perspective as well.
What's your outlook, Chakri, on some of those companies that could potentially benefit from the lower crude oil prices, and how do you see that theme really playing out?
Cement as a sector, tires, yes, cement does not have pricing power, but they're making up for it in volume growth. And now with the crude having corrected, the input costs, whether it's petcoke or coal, and other petroleum-related raw materials, all have come down by 30, 40, 50%, depending on the raw material. So that provides them the margin impact. I think it kind of across board for the industry, depending on the company, it raises it by 1,000 rupees a ton. So what they lack in pricing power, they can kind of make it up with volume and lower costs. So that's one. And second is CS tires, Apollo tires. It's also corrected quite a lot, valuation-wise, and fundamentals look strong.
So how much of this commodity beneficiaries or commodity consumers will automatically start becoming a part of your portfolio? Because whether it is peak of interest rates, top of interest inflation, or a recession, ultimately demand is getting punctured. If demand goes down, commodity prices go down. Would you be playing this reverse of 2022 and 2023 trade, instead of commodity consumers, instead of commodity producers, bet on consumers?
Yes, I think commodity consumers, because still in the case of India, the IMF or even Indian GDP growth is still growing. Post all these shocks, some amount of moderating downwards is likely to happen, but still demand is in the positive territory. Now, if you take, for example, cement in itself, the valuations have corrected a fair bit because of the opposite, which was high crude, high inflation. All those are coming down. So those will provide valuation comfort. Now, in the user of commodity, now in an election year between 23 and 24, usually infra spend, roads, highways require cement. So there's the beneficiaries. Automobiles, again, commercial vehicles doing strong. Some of the two-wheelers doing strong. Again, tires are beneficiary. Like this, again, G20, so which means hotels will be the beneficiary. So there are a number of pockets like this that we can do.
So, Chakri, have you added any of these, stocks from these sectors that you just highlighted in the recent fall?
No, we're looking at Ultratech. We've added Ultratech and we've added JK Lakshmi, one of our favorites. Keep buying it. And I think these are two stocks. And second is looking at CEAT. CEAT also has corrected quite a lot and trades at single-digit multiples now. Banks are beginning to look very attractive, but we're still waiting because, if the economy slows down even further, which means credit growth in India is likely to come down. The growth rates that are built into these stocks are likely to come down. That's uncertain yet, and that's one space which really watching very closely.
Naresh, Tata Motors specifically, I'm not asking Kunal because we know his view there, but it gave a nice spike today. Is there something happening in Tata Motors?
So it's been spiking in a range-bound move. So 440, 455 moment it comes there, it sees a sell-off and we go back to 400, 420. The only thing is over the last, say, 18 months, the stock has consolidated after the peak at 550 levels. And now hoping that base of 380 has now shifted towards 400, 420. The stock is on radar because once you've consolidated for almost a year and a half, we need to watch out for a stock whether it can start a new trend. So once it starts sustaining about 455, that is where the confirmation comes of a trend. So on the radar, not participating right now, but ready to participate once it starts 455.
Meantime, Naresh, wanted to also get in your thoughts on something like BEML in today's trading session. That's active by about 7%. What are the charts indicating, as well as a Sun TV? We haven't spoken about that in a while. Along with, of course, the rest of the media space, this stock is a buzz.
So BML has been a broad range for almost the last many years, wherein every time there has been a buzz of disinvestment, the stock goes to 2,000 rupees. And once the buzz goes off, the stock goes to 1,100 rupees. We are now at the lower end of the trading band for the stock, and say at 1,100, 1,150, I would expect a lot of support. That was the bottom in June of this year, last year, as well as in April of 2021. So out here, the risk reward is good. We could see a bounce back, but it would be a slow and steady bounce back from here on, not a quick one.
All right, that's the outlook coming in on some of those charts this morning. But in the meantime, also wanted to, Chakri, get in your thoughts as to what the outlook is on the auto space, in particular, something like an M&M, Ashok Leyland. What's your view as to how you're looking at margin improvement, volumes as well picking up for some of these counters, and where is it that your preference lies if you had to cherry pick?
Indeed, you just spoke about Tata Motors. Tata Motors also has a commercial vehicles. It also looks good, and its JLR division, they're going to prepay quite a bit of their loans. Is going to come down by about £3 billion over the next couple of 2 or 3 years, kind of bringing the debt levels to really attractive levels. I think that provides a huge amount of comfort from a valuation perspective, and the demand for the high end, which is the JLR, and second is the commercial vehicles, is looking strong. So I think Tata Motors and TVS Motors still continues to be our favorite because among the two-wheeler space, it is gaining market share both in the regular petrol and diesel petrol engines, as well as in the electric vehicles.
I want to check in on what these new age tech companies are up to and whether that recovery that they saw from, those thrashed out levels is actually withstanding. Today, of course, Zomato is holding up about 4.5%. Nykaa hasn't gone anywhere from those 135, 137 odd levels. Zomato holding up at 52, 53 thereabouts. PB Fintech at 582. Let's see what Paytm as well is doing. That continues to languish at 571. Kunal, you were pretty gung-ho about PB Fintech, right? What happens now? And I haven't seen these charts in the recent fall in the markets. What next?
Yeah, in fact, the stock has been doing exceptionally well. In fact, in the last 1 week, 2 weeks, when the markets have gone volatile, the stock has been absolutely sideways, comfortably above the 200-day moving average. So, for example, the 200 DMA for PB Fintech is at 490 approximately. The stock is at 580 plus levels, 580, 590, which means a buffer or a cushion of almost 20% for the stock from the long-term averages. And in technical parlance, we call it as a golden crossover, where the 50 DMA is about to cross the 200-day moving average. That, in effect, could probably spiral up a very strong uptrend for PB Fintech from here on as well. So I would have a very strong bullish stance on the stock from a medium to short to medium term time frame, because the chart patterns are a bit restricted. The history is not that much, so I would probably keep it closer to short to medium term. But yeah, the chart patterns are looking very attractive. I would probably look out for targets of even 680 to 700 for the stock in the span of the next 6 months approximately.
PB Fintech, with the exception of Nykaa, all of them like a rising tide. It's just going up, up, up and up. Chakri, there is merit in revisiting them. I mean, my personal thought is that these are the folks who got capital. No other startup will get money so easily. Interest rates will go down, terminal value increases. These were the darlings a year ago. Then they were the bad bankers in the class, and now they are becoming suitable investment candidates. What a world we are in, right? Good, bad, ugly, everything like a Hindi movie picture.
Indeed, and everything rolled into in a space of less than 1 year, like a good Hindi movie. So the whole issue here is with these companies. Now, the whole premise was based on growth, and growth requires capital, venture funding. That funding is, or capital markets funding. Now, that is not going to become easily available. So they're scaling down. If you look at all these companies, the new age tech companies, they all are talking about profitability. Profitability comes at the expense of growth, because at the expense of lack of capital availability, and therefore lower multiples. And all the multiples even today, if you compare them to the size of the market, to their regional peers, etc., are looking, okay, there's nothing attractive for them. So I think still they would not invest in any of these names yet.
Okay, that's the view coming in. I'm just checking in on some of the losers then on the Nifty 500. JK Paper down about 5.5%. PNB Housing, pardon me. There's also Oil India that's losing out, and Uflex is another stock within the broader markets that's seeing a bit of pressure. Flattened out, by the way, completely, not just the frontliners, but even when it comes to the broader markets. And check in on the small cap index, because after that slight recovery that we saw, you've now got the small cap index, which is down 0.5% in trade. But I just wanted to get in a quick take. Kunal, maybe if you can walk us through the charts of crude oil prices, given the fact that they are trending at 1-year lows, what exactly the charts are indicating, along then with your BTST calls.
So they are indicative of possibly a very strong and a further sell-off over the next maybe 3 to 6 months, because the charts, for example, for crude oil have been forming a classic bearish head and shoulder pattern, and this has been spread across the last, I think, 6 or 8 months of the price action for crude oil prices. And such kind of strong bearish actions, for example, was last seen in 2019 second half, and from there crude oil prices in a span of 6 to 8 months fell very, very sharply. I believe such a similar stance could probably happen for crude oil going forward as well. So not a similar extent that the crude oil prices may fall very sharply, but then maybe closer to 55 or 60 odd dollars is where I would believe that the trades could settle into. In terms of the BTST trades, 2 buy calls. The first one is about Asian Paints. Again, exact collinear view with respect to falling crude oil prices could probably benefit Asian Paints, and the stock has also confirmed a classical breakout, so would suggest a buy. 3050 as a near-term target, stop loss at 2820. And Manappuram Finance could also be a stock which has sprung back into the radar. So earlier I had short call. The stock fell quite sharply, but I think at 112.13 levels, it looks attractive for a contra buy. Targets of 118, stop loss 109.
Okay. And Naresh, what about your BTST trades?
So first would be a buy on L&T Finance holding a risk reward trade here. Support's taken at 84, 85 for the last two sessions, expecting a quick bounce. Stop loss at 85 at a target of 89. Second is the buy on HDFC Bank. The gap at 1530 has been filled. Can be a quick recovery. Stop loss at 1535 and a target price of 1600.
Those are some of those BTST trades. In the meantime, Chakri, wanted to understand your outlook on the entire metal space, given that we are seeing that, a lot of these stocks within the commodity space with that global exposure are taking it in the chin. Your outlook?
Indeed, yesterday's LME prices, all of them cracking, is because of the potential lack of credit availability. All metal companies around the globe, including India, are all highly levered companies, high levels of interest coverage ratios that they have to meet, interest payments that they have to make. And if credit availability is going to become an issue, not yet, if it becomes an issue, then one of the first casualties are metal companies because of their debt-heavy balance sheets. So I think that's the concern, whether it's real or not, until the banks settle down globally, both in both in Europe and in the US. I think until then it'll be a week to call on whether it's at the bottom or not.
Okay. Z's gone up, and Nuresh, everybody waited. All of the market men who bought into Z finally they got impatient, they exited Z, and Z is circuit up.
So yeah, today is a one-day move as of now, but once we start sustaining about 220, that would confirm bottom is in place. The stock went back all the way from the place it started off from. So the stock started off from move from 170 to 380, and we went back to 170, 180 zone. So hopefully the bottom is done, and now slowly that stock starts trending up. Whether it can make a massive move is difficult to say, but at 220 plus, it would be more comfortable that the bottom is in place.
Okay, that's the view coming in. Z Entertainment, a buzz in today's trading session. Naresh, what about your outlook then on some of these other sectors that are coming under acute pressure? Apart from the entire metals basket, you do have the IT space that to a certain extent is bucking the general trend. What's the outlook on the IT index as a whole and individual constituents, the likes of a Coforge, Persistent, some of the mid-cap names?
So I would have a more of a stock specific approach on the IT pack. So we've seen a good enough correction from the recent highs in a large cap like Infosys. The stock made a top at 1600, 1650. It's back to 1400 levels. The lows of September is closer to 1350. So this looks interesting again for a bounce back. Coforge, for example, has also corrected quite a bit in the near term, but it has not done as much of a down move to make it a risk reward buy. Persistent has been the best performing mid-cap stock, has a lot of support, but I think it needs a lot more consolidation before it can make the next move. So at current levels, I find Infosys the most interesting one, followed by TCS, which again has corrected from 3550 all the way down to 3100, 3200 mark. So in this case, the risk rewards are better for the large cap ones, and they could bounce back from here is the view.
Minutes to go. And IT is under pressure. Now, most of the IT companies have come out and said the following line: all is well. I haven't used this line in a while, but that's what IT companies are telling us, all is well. But markets are saying, no, all is not well. Wait for the quarterly numbers, wait for the storm to pick up some magnitude, and all IT companies will be forced to revisit and relook at their assessment of the business cycle. Off from the day's high, nothing is holding on very smartly. Just a shade of green for the Nifty. Just a shade of green for the Sensex. Nifty, a shade of red. No, yes, no, yeah. I mean, what do you say? After 5 days of decline, if you go up by 2 points or 5 points, what do you call that? Dead cat bounce, mini dead cat bounce, recovery from the day's low.
No bounce as such.
No bounce.
20 points on the Nifty is no bounce. I mean, after an 800 point correction.
So how should I phrase the headline today? After 4 days,
no fall.
Market stopped falling.
Arrested the fall. Yeah.
Market stopped falling. Yeah. Nuresh, market stopped falling. Good headline?
Stopped falling with a lot of intraday volatility that generally indicates a bottom at times.
Folks in desk, please note. That's a great headline. That's a great headline. Markets have stopped falling, but the accompanying volatility in the market was high, 27 points higher. Chakri, how should we phrase the market action today? Imagine you have to do my job, write a headline rather than investing.
Yeah, you're doing a fantastic job. I don't think I can match that. But yeah, it's this combination of dead cat bounces plus as flat as it can get. Is probably the way to go until the Fed decides
Chakri,
where it's going to go next
headline
week.
has to be one sentence. Give me one sentence.
Okay. Flat as a pancake.
Good one. Now we know where your next job interest should be, perhaps in media.
भैया मेरे पेट पे क्यों लात मार रहे हो? Okay, Chakri, flat as a pancake. It's a nice line, but I certainly cannot do what you do, which is invest brilliantly. I can assure you on that. 17,000. You close above that. Psychologically, does it mean anything, Kunal?
Frankly, nothing. I mean, 17,200 is the level which psychology should mean a lot.
Okay. Nuresh?
So a flat close today is actually a strong indication according to me.
1 minute to go, and let's look at the gainers and the losers. Adani group of stocks, they were the eye of the storm. Nobody liked them. Suddenly nobody wants to sell them. They are outperforming. 5-day change in Adani group of stocks actually would be quite a handsome one. Adani Enterprises post-budget came down to 1,000 rupees, sub 1,000 rupees. From 1,000 rupees, it's a 100% recovery for Adani group of stocks, at least for Adani Enterprises. Fall of 50% and recovery of 100% still makes it down 40%. You got the breadth of the market, which was meaningfully weak. Unlike yesterday where the breadth was okay, indices were down. Today the indices are flat and the breadth has been meaningfully negative. Okay day for consumer names, poor day for metals. Selectively, there was outperformance in Aurobindo Pharma, Lupin, some pharma names, because typically that's how markets would always migrate. 30 seconds to go, and before we shut shop, you would say that we're going home at least with some stable print on the Nifty. You want to see days like this because it's not about selling, it's not about news, it's really about confidence. And when markets, they go through a crisis of confidence or nervousness, it is the central bankers who have historically come out and they've really stemmed the market fall. So I think central bankers are doing their bit, but I'm surprised that why global markets and Indian markets are just not reacting to the step the central bankers have taken. Maybe markets are thinking that this is tip of the iceberg and more skeletons will come out of the cupboard. I don't know. Markets are shut. We are going home with a print of green, a print of 17,000 plus, and hopefully tomorrow morning when we open, let's hope we pick it up from there rather than we get worried about Credit Suisse or some other regional bank in the US.
Yeah, it seems to be the case because Europe as well has started off in the green, so it doesn't seem like we're alone in this recovery. Of course, it is all left to the mother market, so let's see what the US equity markets do eventually. But before we end the show, here's a little something. NASA has revealed the first prototype of their newly designed next generation space suit. This space suit is tailored and accessorized for the first astronauts expected to go back to the moon's surface over the next few years.